What's up traders, welcome to Failure to Displace. In this video we're going to take a look at this morning's London session on EURUSD and the analysis that led to this potential 3R setup. Let's jump into the charts now and go through the breakdown. As always, we will start our analysis off here on the 15-minute time frame, looking for our session liquidity levels as marked out by our session liquidity tracker indicator. So the links to the indicators are all in the description below if you want to set your charts up to look like mine. The session liquidity tracker gives us a green line for untapped session liquidity. Red lines show when that liquidity has been taken. So we can see we have untapped Asia high at the moment and essentially equal lows from the New York PM session low and the current Asia low as well. We have untapped liquidity from the London session yesterday and also the daily high from yesterday in the Tokyo session. At the moment we can see we're leaving bullish price action, so Asia has pumped up high. It's breaking out from the New York PM session and New York AM session ranges, and the bullish fair value gaps are being respected. What I do want to note on this chart is that we do have this breaker block here that was respected yesterday. This breaker block here that was respected yesterday. So these consecutive down closed candles before the new high, putting the daily high in yesterday, these are a higher time frame breaker block. This was respected once yesterday, so we were able to capture a trade off this breaker block yesterday in the London session. You can see price came up into the breaker block and then dropped away. I'm keeping this on the chart because it's been respected once, it hasn't been violated yet, so this is another potential area. We can see Asia as well actually has just tapped up to the bottom of the breaker block and then is rejecting away as well. It's just something to be aware of. I'm going to mark out the 15-minute fair value gaps. We've got a 15-minute here which is currently being respected. This 15, which is in the middle of this range, has been wicked through, but there's been no body closes in the fair value gap. And then we have these two consecutive fair value gaps at the bottom here, going into this lower order block as well. If we're coming down that low, honestly, I would expect us to take out these equal lows here, so I won't be looking for a reversal of that low. We may be looking for a continuation trade, so I will mark out using our fib the optimal trade entry of this range. So we can see the optimal trade entry, which is the 618 Fibonacci, is actually within this fair value gap, basically sweeping this low that we put in Asia. So let's mark out this Asia low as sell side as well, because that's something to be aware of. If we come down that, we could be tapping optimal trade entry, taking some liquidity, and then a potential reversal to come back for the highs. And we've got a 15-minute fair value gap that's been untapped up here as potential resistance within a breaker as well. So fair value gaps within breakers, obviously very, very sensitive areas, something that ICT has mentioned before. Let's drop onto the 5-minute and see how price progresses now as we are entering the London session. So our London trading window starts at 1 AM. The reason it starts at 1 AM is this is the open of the new 4-hour candle. So we can expect volume to come into the market as new candles open. Higher time frame candles bring more volume. So 4 hours, we could see a push at this point. So London has now opened. We've respected the 50% of that 15-minute fair value gap. So we've still got bullish price action here. Strong push away. So we've taken the Asia high. We've come into the breaker block. I'm going to drop onto the 1 minute now just to look for a potential reversal point here. We've swept liquidity. We're into a 15-minute fair value gap and inside a breaker block. So we'll see if we can get a lower time frame now entry to take a short position if we get the reversal pattern that we're looking for. So this price leg up coming into the London hour, that's a really strong move higher. So we'll come down, we've left at this point a balanced price range, so that's again a highly sensitive area. This bearish fair value gap with the bullish fair value gap opposing it, where the two overlap, is a balanced price range. We do have a volume imbalance here as well as a bullish fair value gap. I need some more confirmation to show us for a reversal. So we've respected the balanced price range. We could have a break of structure here, so we do have internal sell side at this point. It's not an official break of structure. For an official break of structure, I will be looking at this swing low all the way down here. So it's quite a long way away. My official break of structure is the low that puts in the new high, which is this here. However, we do have internal liquidity now, so an internal swing low that's been put in within this range here, and we've respected this balanced price range. So potentially we could look at something at this point. So we have wicked through that, so we have a break of structure, but we're still respecting the bullish fair value gap here. The time, we've just had the new candle open, so we're at 203, 04, 5, 6. Bullish buyback, respecting the 50% of that fair value gap again. Okay, so we're closing through that fair value gap now, and we've put in a new high. So our break of structure is now this swing low here. So there was no entry at that point. I wasn't going to take a trade there. I didn't get the confirmation that I was looking for. I would have needed some closure below this swing low to start looking for a short trade, which we didn't get. We're coming now further into the 15-minute fair value gap that we identified. So this is the 50% of the 15-minute fair value gap. We've got a new swing low at this point here. Let's put in a new high. So that could be our potential break of structure. So this is the new swing low. It's got a higher low to the left, higher low to the right before it put in the new high. So this is the now swing low that we'll be looking at for a break. We'll come down, we've left a balanced price range. So we've got a fair value gap. I'm going to delete this breaker block because it's just messing up the colours. We've got a fair value gap, bullish fair value gap followed by a bearish fair value gap. So again, where the two overlap, that there is a balanced price range. So again, highly sensitive area. Okay, nice. So we've come down, we've got a body close at this point. So we've had a break of structure with a body close. We've left a bullish fair value gap. Sorry, we've left a balanced price range at this point, so we could potentially, if we get a pullback to that area, look for our short position, anticipating the 50% of the 15-minute fair value gap to continue holding. Time wise, we've just opened a new 15-minute candle, 18, so we're just into the new 15 minutes now. So really probably looking for something around 230 would be ideal for me, which is the start again, another 15-minute cycle, half an hour into the hourly candle. So bearish fair value gap's been left. So this is a good indication now that we do have a sell program in play. Are we going to get any pullback at this point? So we need to be monitoring the optimal trade entry as well, see where premium and discount of this price leg is. The potential short from here would be good if we get a pullback into that fair value gap, which is into a discount. I would take that as a short position if price comes back there with the stop loss just above the high. So I'm not waiting for optimal trade entry. I would go at the discount 50% of this range. So as soon as price pops into a discount, jump into a trade, anticipating to be able to take out this swing low if it doesn't take out the low already, which would be a good take profit one, and then ride that down, taking out the session low probably Let's see how price continues. So we're at 22, so we're not quite at the half-hour mark yet. We've had no pullback. So what I'm noting here now is we have cleared through these 3 consecutive down close candles. So these are now a breaker block. These 3 consecutive down closed candles should have been respected as an order block. So if price was bullish, price would generally come into this area and then start rejecting to go higher, potentially going for our liquidity above us. Price has come down, it's cleared through these. So these is now a failed order block, which is a breaker block. Because it's not acted as support, we can expect if price comes back, it to act as resistance. We do have a fair value gap at this point as well in here. So because we've got a breaker block with a fair value gap, it kind of negates the need for the optimal trade entry or the premium and discount, because you wouldn't expect price to come back through this area now. So even if we're not going back into a premium of this range looking for a short, you would still expect a rejection at this point. Again, coming to 230. So I would be looking for a short trade off this breaker block and fair value gap. Let's just zoom out and just take a look at what price has done. So we have the 50% of that 15 minute. This is ramped volume. So we can see that push that we got at the beginning of the London session. We've just got this ramped volume now. We've had no real pullback. So that's all built up liquidity. So price could drop very, very quickly through this to take out sell side here. As a minimum target, you would take out that sell side, and then we do have that swing low that we put in the Asia session, which is within that 15-minute fair value gap that we highlighted earlier. So my stop would be just above the high. Again, expecting this 15-minute fair value gap to continue holding. Entry at the breaker block. Target number 1, taking out the sell side here, which is the current session low. That gives us just a 1.6. And we're approaching, so we're at 24. So ideally, I'd like to be getting tagged into this at around the 230 mark, the open of the new 15-minute candle, but then a drive down to take out the sell side. We have pulled back, so we're at 27. So yeah, I'm happy to get in at this point. I'm expecting a 15-minute push. So there is 29. 30 tags it, so we're in. So let's just see if we now get the new half-hour volume coming in to take out this sell side. So I'm just trying to get the zoom right for you guys. I know a lot of people complain that I don't make the screen big enough for you to see. So we've been tagged in, we've hit the fair value gap, we've hit the bottom of this breaker block. Let's see if now we can take out this ramped volume. Yeah, so good reaction at that point. So we can see that bearish fair value gaps are being respected now. So it's a good sign that we are in a sell program. So that makes me more confident of this trade. Yeah, strong move there. So price is continuing nicely. So we're into this 15-minute fair value gap now. So we just need to be aware that we could get a reversal. I would hope that it would come and take out the sell side before any reversal, so at least we can get TP1 taken. Nice. So there's TP1. So that's taken 50% of the trade off at this point, so 1.6. And then ultimately I would be targeting that swing low to give us a really nice 3R trade. So I'm just going to clear out. No, I'll leave these on so we can see if they're being respected. See the 50% of that fair value gap again is causing a reaction. We've swept sell side. We're getting a bit of a pullback here. We've created some kind of relative equal highs here. We've just cleared through those. So we've swept liquidity at this point. I would class this as liquidity here, because we kind of engineered these pushes up into this high, so we swept some liquidity. So fingers crossed that's kind of done now as far as the pullback goes, and we can get continuation down. Interestingly enough, again, we're approaching a new 15-minute candle as well. So this is now 3:15. Yeah, so price has come again, respected that fair value gap, swept liquidity, broken lower, respecting a fair value gap. Aggressive move down, big fair value gap. So we've cleared this 15-minute fair value gap now, so we can get that off. We can see that we've taken that sell side, so that's no longer valid. So now we're looking how price is going to react at this 15-minute fair value gap, anticipating a sweep of this liquidity. Oh, nice, strong move down. Bit of a pullback, but we're respecting this fair value gap at the moment. So you can see what happened there. We came down aggressively into this 15-minute fair value gap and had quite a strong reaction pulling away. I wouldn't expect a reversal though until we take liquidity, in all honesty. So I would anticipate liquidity to be taken. However, this fair value gap would have been a perfectly valid place to close the trade. Strong move again. So we've built relative equal lows here, so we're building sell side. So this is giving me more of an indication that price is willing to come lower. We've engineered this liquidity down here now, so I'm less worried about a pullback and taking us out. Continuing to build this sell side down here. It requires some patience this, but we're engineering liquidity just above that swing low that I was expecting to get ran anyway, so this is actually a good sign. Strong pullback. So again, we've got relative equal highs that we've been building, so we're engineering liquidity in this little box here. Created liquidity up here, we've got liquidity below us. We've just swept the liquidity high. So let's just see if we can break back into this range now to take out the sell side below. Yeah, so we've swept those highs. We're pulling back into this range. This is where patience is key. It would be very easy just to close out. Under normal situations, I would have closed out the trade in full probably. However, I need to try and train myself to be patient. And we can see in this instance, patience pays off. So we have broken the highs that we engineered, pulled back into the range. We've now taken the lows, and hopefully this will take out this swing low below us now, which we were engineering liquidity just above. And there's our 3R, so it's just tapped it and taken that liquidity. So quite a long trade. You were dragged around quite a lot, so it wasn't a clean drive down to this, but we could see the price was telling us it wanted to go lower by engineering this liquidity at the top of the fair value gap. So nice setup there, quite complicated in all fairness. I didn't take this in live time, I'll be perfectly honest with you. I missed it. I'm only catching this now as a hindsight review, but it does look like a clean setup. So I wanted to log this so that I can come back and review this myself and basically burn this into my brain, look for these setups more effectively in real time. I hope you found the analysis useful. If you did, please leave the video a thumbs up. If you have any questions or comments, leave them down below and I will do my best to get back to you. And likewise, if you're enjoying this content and want to see more analysis like this, then consider subscribing. I'm dropping videos every single day and it'd be great to have you on board. Thanks for watching and I'll see you again in the next video.